Thank you.
Good afternoon, everyone. Myself, Vamsi Krishna, and he is Mr. Praveen Kumar, and we are from ICBM. Uh, we are here to discuss about the fraud happened in the derivative market. Uh, our topic is a case study of. Sir.
You give your introduction.
And our topic is Barings Bank, case study of Barings Bank and Nick Leesons. And Barings Bank is one of the oldest merchant bank in Singapore, and Nick Leeson is the general manager of this Barings Bank. Surprising. Showed a losses of 1.4 billion dollars, 1.4 billion dollars in billion dollars in his in a fraud account. Nick transacts in futures and options and orders for his clients, and Nick 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 Leeson invests in Nikkei 225 futures, which was traded on CIMEX, Singapore International Monetary Exchange, and Japan's Osaka Exchange. So one of his traders makes a loss of 20,000 pounds. To hide his losses, he created a fake account on the name on 888888 account. So Nick was to hide his losses. He created a fake account, and and the bank continuously in the losses. So Nick started a new strategy with a speculative trading to cover these losses. By lucky he get the profits on speculative trading. So this sudden luck motivates him to do more speculative and gamble more, and the top management pressures him to gain more profits. So he started do more speculative, and the bank incur more losses. He did not give information to the top management about the this fake account. So this fake account losses rise to $7.78 billion, and after when auditing is done, there is a accounting mismatch is held in the accounts. So after that, Nick forges the document of audit document and signature of his boss and he solved auditing issues. Later on, in Japan, January 17th, 1995, earthquake attacks the Japan, that causes market to the crash. So, and the huge selling, because he traded on Singapore International Exchange and Japan Exchange. So there are huge selling pressures from his client. So, and market continuously falls. With these losses, the total account of this fake account shows a loss of $1.4 billion. And when next auditing is done, the fraud came into picture. So on February 26, 1995, Barings Bank was declared as bankrupt. Later on, Dutch Bank is acquired this Barings Bank, and with this, the company with these issues, how these lessons are learned from this fraud will be continued by Praveen.
Good morning, one and all. Till now, Mr. Omshi was telling about how the fraud is happened. Now, from the happening of frauds, what are the lessons we are going to be learned? A few important lessons for senior bank managers, including the bank, importance of internal controls and audit process. From observing all this till now, what Mr. Omsi said, for that these people are giving lessons to. We think the following should be avoided by the banks. Lack of internal checks and balances. In India, we have one bad habit. Many people have bad habit. If when we get any work, if we have time for doing that work, we never do that work. When the target is appeared, when we need to submit tomorrow, then only we are able to do that work. Like that, we are following like that tradition. So when in banks also, if any transactions are happen, we need to update every day. Then only may chance to reduce the frauds. And also lack of understanding of the business, poor supervision of employees. When the employer have attention to the employees and when he have observing skills, when he conducting the many meetings and doing that all things, then only he is able to control the fraud in that banks. Lack of clear reporting line. When the people in any organization or any bank, coordination is lack of coordination may chance to happen many fronts. So for that, in each and every business or any organization, if the employees have coordination, then they less chance to happening the frauds. And also few points are we are observing in the case management wanted to enter into a market, but banks was not prepared for the activity on a derivative market. So derivatives in recent years powerful tool in as to the traders. Static regulations are needed in order to avoid the next bearings. And what we are concluding after this case study, Lesson was convicted of fraud and sentenced to 6.5 years imprisonment. And fall of Baring was a wake-up call for financial institutions all over the world. How much they are gathering attraction and how much these happenings. For happening this thing, many people are, one person is filmed on Legend's biography. He is, in that movie he said, rogue trader. The trading and bank officers functions were not detained, bargaining, lending to its collapse. If by happening this, many institutions, many regulations are implementing the new forms like that. Thank you.
Thank you. This is a case study and it's a learning process. Please remember, one outstanding investor, Warren Buffett, what he said? He said derivatives are time bombs. Not all derivatives. When you don't understand